Now, Rahul Bhasin is joining us now, managing partner at Bearing Private Equity. He's with us to talk about what he's seeing in the market. He's very perceptive of larger trends, themes, and of course, some of it, makes it into the portfolio at Bearings as well. Rahul, it's a pleasure. Great to have you with us here. Thanks very much for your time.
My pleasure entirely.
Do you have a view of on market levels, Rahul? Let's just get that out of the way. In terms of whether we're too expensive or are we fairly valued. We had a mutual fund manager who was saying that near term there are very few pockets of undervaluation left now. We had Prashant Jain of ex-HDFC yesterday who said something very similar. So I just wanted to get that out of the way. Any thoughts?
Yes, I mean, that's probably true. I think the markets have become a lot more efficient now than they used to be. I mean, historically, today almost, if you look at the financial savings of the country, almost 7% is going into mutual funds now. People who are used to a scenario where 1.5% was going into mutual funds are used to a scenario that no matter which market you always had some pockets of undervaluation or mispricing given the current interest rates. I think the game has changed a little bit, and I think that we've got to anticipate what the discounting rates are going to be and what the structure of the market is going to be at least 18 or 24 months out, and then look at where valuations stand. I think this whole sort of thing of at today's pricing that one would get a serious undervaluation, I think that's a bit of an optimistic wish list. Especially now that you have so many algorithm-based investment themes going on, which picks out undervaluation and systematically invests in even unknown names. So, you're bound to have a much more efficient market in that sense.
That has become harder, isn't it? Compared to even 5-6 years back. Because you want to go back even further. It's a different market, absolutely. Rahul, there's one large space, I don't want to say they're undervalued, but which is relative to their own valuations and prices, is still lower. IT services. You have investments in IT services. You guys have been investors in mid-cap IT services for a long time, for the last 15 years or so. What is the space? 25. What's the call, Rahul, there, that space? Do you think one gets to make a lot of money investing, buying here? Go on.
Yeah, look, these are all very well-run companies. I think the first thing you look at IT services, that they're all very well-run companies. The governance architecture tends to be very good. Their systems and processes are really sound. I think the market's concerns are twofold in my view. The market's concerns all come from the fact that you are expecting a US slowdown, possibly a recession, possibly in other parts of the world. One has seen the latest data suggesting even China is slowing down, which means the globe is slowing down sharply. And then there tends to be a sort of a leveraged impact on IT spends, and therefore I think the market's concerned about short-term impact on IT service businesses in India. And the other thing I think the market's worried about is that the entire generative AI, etc., they think that possibly productivity might rise significantly. And if productivity rises and you have, time and material kind of model, which is still widely prevalent in the IT services industry, whether in fact work might come down in the short term. But if one looks through that entire ecosystem and one looks, 5-10 years down the line, you look at all the structural changes of how core IT is becoming and how, almost every business is run out of an IT backbone, you'll find that this IT services business will come back quite strongly. So if you have greater than 3 to 5 year sort of horizon, I think all these businesses are steals in that sense. But in the short term, I would expect pain.
Sure, got it. So you're saying with the long-term horizon, there's nothing much to worry about in the IT space. But I want to come back to that point you made about generative AI tools. And we were doing some research, found that a lot of companies in the listed universe are spending big on generative AI, whether it's something like an Apple or Intellect Design Arena, LTI Mindtree, Persistent Systems, and a lot more. I mean, I guess that's the need of the hour. Which are the companies you think could make it? Which are the companies that would have to perhaps see losses? And how are you feeling about this space in general, the generative AI space?
Look, I think it's a fundamental change in architecture. It's like saying, you now have internet, or I think this is going to change productivity across businesses. And especially of knowledge businesses, productivity is going to change very dramatically. So I don't think that this is, will it kill some jobs? Of course, it will kill some jobs, but it will generate far more ultimately. And it's going to create a lot more wealth because of productivity. In fact, I think the world is suffering from this inflation hangover. I think it might be generative AI which solves for this issue. And which companies will succeed? Actually, there are a lot of companies in the private space that we are engaged with in one form or the other who've been working on this for a long time. I would only suggest that, this has caught the market attention in a wider trend today, but the companies who are going to do well in this are those who are making investments and working on this at least 5 years ago. The rest will be playing catch up. And even if you're playing catch up, I mean,
Right.
I think every business and across every sector can use the productivity gains that these tools offer.
Sure, sure. Rahul, hi, morning. So, to just complete the technology conversation, let me marry technology where you already have several holdings and consumer. I mean, you have some of the regular FMCG companies, like I think Dabur, Godrej Consumer, Nestle. I think these are some of the portfolio holdings. But what about consumer technology? I mean, I would just want to get your sense on what you've made of this last 1.5-year journey of all the aggregator platforms, right? Now, whether it's on the food side, on the beauty side, or the payment side for that matter, what you made of the public market journey, where valuations are now, and whether at some point in time this space would interest you at all.
I think you're thinking, are you sort of alluding to the Paytms and the Zomatos and the Nykas of the world? Okay.
Absolutely, Rahul.
Look, it's not that I think they're actually solving for a real problem. There's a market discovery taking place. There's a network impact. All of those things are there. The real issue has been that in India, the number of consumers, if your cost of customer acquisition is so high, the sad truth is that the consumer surplus that customers have in India tends to be small. So the amount of time it takes to actually get economic payback on acquiring that incremental customer is challenged. Now, historically, markets have rewarded very high growth of the top line, and therefore those are the strategies these companies have adopted. But I think that on the margin, they might be trying to attract the customer, which is not economically viable at this moment. Now,
Right.
the customers will become economically viable over a period of time. And I think that's the challenge that these businesses are facing in terms of being able to generate current income and current earnings. That's so a lot depends on how they approach this. I think if they were to slow down and sort of, stick to acquiring viable customers and grow, in terms of how, one is acquiring customers, India has a huge population base. But I think this distinction, if they were to manage better, you would get better economic entities out of it and more attractive from an investor's perspective.
Rahul, I remember you used to own sort of jumping sectors, Manappuram. I see you own Muthoot as well now. After
We used to.
Sorry, you own both now or one?
We used to own both. I think we're largely out of both of them. We have a small tail position in Manappuram still.
Okay, so my question disappears then. These, in terms of the capacity, capex kind of sectors, I think you still own a couple of contractors?
We had a company called TD Power for many years. We've just recently divested it, but I think we think the capex cycle.
Anything in this space, manufacturing space, and it's very vast. But anything you own there?
PG Electroplast, which is a company which is you can think of it. I think from the market's perspective, you can think of it as Amber sort of clone, but growing 4 times as fast as Amber.
All right. I think we could have gone on for a bit more. We got more questions, but no time. So Rahul, we'll request you to come back soon and talk to us. This was just getting interesting. PG Electroplus is a stock Rahul was talking about from that space, but I'm sure there are more. Rahul, thank you very much for joining us and talking to us about what you like and how you're thinking about markets overall. We'll take a break here. Mitesh Thakkar will be with us with more on the other side. We take stock of markets and fresh trade. Stay tuned.